All right, so let's do this, Chris. Real life Chris, corporate Chris. You find $50K in your bank account tomorrow.
Great.
You are our team's investment savant. What are you doing?
Flattered.
What are you doing? Are you buying? And you don't currently own, correct?
Correct. I'm a renter.
You don't currently own your primary residence.
Hypothetically.
Hypothetically.
If I find $50,000 just hanging out in a savings account tomorrow, I would probably hit the ground running to find a 2, 3, 4 unit property that's between $200,000 and $250,000. That doesn't require a whole lot of renovations, turnkey, where hopefully 1 or 2 of the units is already rented so that I can purchase it, day of closing, start cash flowing it.
Another downside, if you sink that $50K into an investment property, and then let's say 2 years later, you are in a position where you're ready to go buy a house, if that asset is not performing, if that that investment property you bought is not performing properly, or you had a year with a lot of people moving in and out, or you love to use the example of the roof, that could saddle you, right? I mean,
Yeah.
so it's not, real estate is not guaranteed money either. It's a living, breathing.
It's not a liquid asset.
Correct.
Very illiquid.
Right, and it's not necessarily like a dividend where it's like, watch your bank account grow. You have to work the building, and there's gonna be, that's why we use average returns, right? Because there's gonna be years where people move in and out and your net income on that building was negative. Is that possible?
It's possible.
Yeah.
So alternatively, what are the primary advantages of taking that $50,000 and parking it in a property that you're gonna live in? Why?
It really depends on where you are in your life. So I'll just use, again, myself as an example. When I sold my condo, I was a total free agent. I could go live wherever I wanted. I wasn't saddled to any place or living situation. If I had been in a position where I envisioned myself living somewhere, I always go with 7+ years. The very first place I would have taken that $50,000 liquid cash is put it into my own residence. Just because at that point, I am eliminating the short-term risk of that asset not having appreciated. Because I'm in a position where I think I probably would be moving again in a year or two, for me to take that 50, put it into my own place,
Doesn't make as much.
It doesn't.
Yeah.
I very well could depreciate on a 1-year term, right?
On the other edge of that, I mean, even if you factor in the potential of getting a job in Seattle or New York a year, 2 years down the road before that 3-year kind of threshold, you still want to look at a property that you're going to live in and purchase for yourself. On the back end, you want to be able to run those rent comparables and determine that, hey, once I purchase this is going to be my monthly principal, interest, taxes, insurance, and I can, if I have to move 2 years down the road, I can rent it out for
That's a good point.
$1,000 more than that, and that net difference.
So what I hear you saying then is, if you are someone who wants to purchase but also isn't 100% secure in their next 3 years, make sure it's a place you could rent out.
Yeah.
I think that's, to me, that alleviates almost all of the concern that I just brought up, as long as they have a real estate agent who is also running rent comparables. If you have to move to Seattle for the job after a year and you rent it out, and you're renting it out for $1,500, you owe $2,300 because your building has super high HOAs and taxes, I'm calling you up and I'm saying, Chris, WTF, man.
Yeah. I mean, you got to cover all your bases up front. When you're looking at purchasing a place, these are things that you might not think about right off the bat. You're more focused on how am I going to get a loan? What's the purchase price? What are the HOA fees? What are the taxes? Where we come in, we add a lot of value is we sit you down and say, hey, you got to look at this from an exit perspective.
Yep.
You got to be educated on, hey, worst case scenario happens, you have to move. What are you going to be able to rent it out for?
Yeah, I feel like in our industry, we so highly focus on resale value. That's one strategy, right?
Yeah.
Strategy 2 is staying there. Find a place you actually like, and then if something, if life changes, whatever, let me rephrase. If the market changes, you're happy in that place, right? So that's another possibility. So your third exit strategy is renting it out.
The worst advice, I'm sure you agree with me, is if you have liquid cash, is to leave it in a checking or savings account. Just educate yourself, understand what your options are. And that's where Joey and I come in handy.
Sitting money is losing money.
Yeah.